It's the end of the world as we know it. Oh, it's the end of the world as we know it. Oh, it's the end of the world as we know it. And I feel fine. Audio works. Hello and welcome to the Crypto Mining Show, your one-stop shop, there we go, for all cryptocurrency news from the perspective of a cryptocurrency miner. Today we're going to be talking about the FedNOW payment system and the Ripple partnerships, relationships, whatever you want to call them, with the Federal Reserve Bank of America and of course the New York Fed. All of these pieces together, new research papers that are coming out, being launched, a lot of weird stuff happening going on here. And of course, FedNOW is supposed to launch here in July, at least the beginning of it. And I don't know if that's going to be testnet or what. We haven't gotten more information on that quite yet, but we will report on it once it does come down our lane. Binance plunges into crisis as senior execs quit over CEO Changpeng Zhao's response to Justice Department investigation. BlackRock CEO Larry Fink says Bitcoin could revolutionize finance. And Bitcoin mining is a game of survival right now. Consolidation and potential AI diversification. At the end of the show, we're going to be talking about basically some system requirements that I've been able to gather from current projects that are running in relation to AI. Now, they aren't blockchain, but it does give us a good idea of what we should be looking for here in the near future if you are upgrading your GPU mining stuff. Basically, that's it. Now, we also have a 16 gigabyte version of the RTX 4060 Ti coming out. For mining in particular, this card is interesting. The only difficult part about this card in particular is going to be the pricing, as it is slated to be $100 more than the base 4060 Ti. But you know, from a mining perspective, that extra memory is going to do a lot in basically algorithms surrounding like Dynex, for example, right? Then we're going to be talking about some new miner releases from both Team Red Miner as well as G Miner. And a little bit at the end of the show, after we talk about specifications and all of that, I am going to be talking about reforming the format for the Crypto Mining Show, because we are now doing blocks. Now, if you guys haven't been following on the channel, we have started a new series called Blocks, which covers cryptocurrency news as quickly as possible, 5 days a week, Monday through Friday, meaning a lot of these topics are not needing to be covered a second time. So I think we'll be diving deeper into individual topics on the Crypto Mining Show, and we'll be talking about that at the end of the show, getting some ideas and moving from there. But just kind of trying to get all of the information out, deep diving the specific topics that need to be deep dived once a week live, and getting any questions that you guys may have gathered over the week, and then covering all the news topics as quickly as possible. I still want to get back to how-tos and all that, but it's going to be a little bit while I go through this personal transition. Lots of stuff going on in basically my private life. So let's go ahead and talk about it right after a word from today's sponsor. Today's sponsor is BT Miners. BT Miners has been a longtime sponsor of the channel and a proven reliable source for ASIC miners. If you're looking to purchase ASIC hardware from Bitcoin to Dogecoin miners, they are available for purchase on bt-miners.com. BT Miners is a trusted source by both ASICminervalue.com and CryptoMiner.com. Follow the affiliate link in the description and tell them SOT sent you to support the channel. And back. So first things first, BlackRock CEO Larry Fink says Bitcoin could revolutionize finance. It's been really interesting as we start to observe BlackRock completely do a 180 on its opinion surrounding Bitcoin. Possible manipulation for sure. Guaranteed manipulation, maybe not. But now with, of course, all of the partnerships with Coinbase being their SSA on the NASDAQ, etc., along with the being, Coinbase's partnership across the board. Tons of different ETF filings that are now referencing Coinbase, and the recent dump into a recent pump after BlackRock has kind of come out and started filing for ETFs. We are kind of seeing what I would assume to be a bit of manipulation. Let me get this article right up here for you guys. Boom! There we go. The asset management giant in mid-June filed paperwork with the SEC for a spot Bitcoin ETF. BlackRock CEO Larry Fink says crypto, specifically Bitcoin, could revolutionize the financial system in an interview with Fox Business on Wednesday. You think? I mean, technically it kind of already has, right? We've seen Bitcoin kind of mature over the past 12 years or whatever it's been now at this point. And it has obviously demonstrated staying power regardless of what traditional financial institutions have been trying to say the entire time. And let's go ahead and see what he said specifically. Quote, "We do believe that if we can create more tokenization of assets and securities, that's what Bitcoin is. It could revolutionize finance," end quote, he said. Previously known to be a skeptic of crypto, Fink years ago suggested fans of the asset class heavily used it for, quote, illicit activities. Now, this is obviously, like I said, a 180 turn from Fink on this position. And it does beg the question, like, was this to drive the price down to get into a better position himself? And if you watch the cryptocurrency markets, the best time to go ahead and get into Bitcoin is during this bear market period that seems to happen in a cyclical nature that is greatly accelerated compared to traditional financial markets, right? We always see a cyclical nature within the stock market, everything else. In fact, right now we're predicting essentially some sort of crash within the next 3 to 18 months. If you'd like to talk about that in more detail, we can cover that. That's the stock market. Now, cyclical nature of Bitcoin is accelerated on a 4-year cycle. And if you paid attention to that and are aware of the cyclical nature of everything in life, then Fink would probably be aware of this, seeing that they are, one of the largest investment companies ever. Then you would probably go ahead and implement this strategy to drive the price down even further during a bear market, and then prep yourself with some pretty hefty bags and ETF trading options right before the halving of Bitcoin. It just makes sense financially. Fink continued to go on and say, quote, "Instead of investing in gold as a hedge against inflation, a hedge against the onerous problems of any one country or the devaluation of your currency, whatever country you're in, let's be clear, Bitcoin is an international asset. It's not based on any one currency, and so it can represent an asset that people can play as an alternative." Now, remember last week we did talk about kind of this decoupling from the stock market with Bitcoin, the US stock market. And I think that's coming into the realization across the board that this is an international asset, and we will see further decoupling from traditional, US stock exchange with the price of Bitcoin and its price movements. The iShares unit of BlackRock filed paperwork with the U.S. Securities and Exchange Commission on June 16th for a spot Bitcoin exchange traded fund. While BlackRock has an almost perfect track record of getting ETFs approved by the SEC, Fink couldn't say when a decision for its Bitcoin ETF could be expected. Quote, "We hope that, like in the past, we could be working with our regulators and get the filing approved one day. And I have no idea when that one day will be. But we'll see how that all plays out." Of course, there is still this big question, I think, surrounding when we get into regulation for Bitcoin. The biggest problem with the ETF filings from the inadequacy perspective has been surrounding primarily the manipulation possibilities of the actual price of Bitcoin in general, meaning that they want a large volume and some sort of security backing that. That's why you have these partnerships with Coinbase, is because Coinbase holds enough Bitcoin to stabilize the market technically and not do any large manipulation. This is probably also why we see this attack going on against Binance, because Binance does have a large stake within Bitcoin and could pose a risk for essentially any regulatory checks for ETFs, right? If you have this partnership with the NASDAQ and Coinbase, yet Binance still has a strong position within Bitcoin enough to manipulate the price and basically bring that kind of problem into the forefront, then I think you'll start to see basically institutions attack Binance, right? Because they want that under a US controlled company as well, which Coinbase is a lot more controlled by the US than Binance is. Binance plunges into crisis as senior execs quit over CEO Changpeng Zhao's response to Justice Department investigation. Now, I don't have the full article on this. Unfortunately, right now it is on Fortune Crypto. I think you have to do this little monthly plan, but suffice to say that Bitcoin, or Binance in particular, is under strain for months amid an onslaught of regulatory investigations. And we know the regulatory investigations that we've talked about last week. We're completely aware of this. And I wanted to just bring it up primarily due to the fact that we see, the SSAs with Coinbase for the ETF filings. And then on the flip side of this, a regulatory onslaught onto Binance. There's more going on too. If we talk about regulatory attacks on different cryptocurrency exchanges, there is also specific regulatory attacks on cryptocurrencies themselves. One of the largest, of course, that's been going on for quite some time has been Ripple, or XRP. And some of that is coming to light now as to why that may be, as we start to see the New York Fed wrap up regulated liabilities network proof of concept using a WCBDC. The theoretical network would help the dollar maintain its status internationally with game-changing improvements in service. The Federal Reserve Bank of New York's Innovation Center, NYIC, has completed its proof of concept of regulated liability network in conjunction with 9 large financial institutions and the SWIFT network. The project created theoretical infrastructure to exchange and settle commercial bank deposit tokens and central bank liabilities using distributed ledger technology and a simulated central bank digital currency, CBDC, in the United States. Asset transfers are currently carried out through messaging along the chain of the parties involved. Messaging takes place almost instantly, but settlement does not. Tony McLaughlin, head of emerging payments and business development at Citi Treasury and Trade Solutions, said in a webinar introducing the project results. The project abandoned trustlessness and anonymity. Of course it did, because why would you want a trustless system and anonymity? Among other features from its blockchain, to create a system that contained value in the ledger rather than settling via messaging. The simulated RLN functioned around the clock with multi-asset settlement and programmability, McLaughlin said. The simulated RLN preserved full U.S. anti-money laundering and know your customer, KYC for short, in case you hear that in other places, protections in the international settlements, McLaughlin said. He recalled the RLN as a, quote, a game changer for international users of the dollar, end quote, that would help maintain the dollar's role as the international currency of choice. The results of the project were also summed up in separate technical, business, and legal reports. The legal report noted, quote, we have not identified any legal issues that would prevent the creation of the RLN system under the current rules and regulations. Since the project looked at regulated assets, cryptocurrency and stablecoins were not included. Permissionless blockchains and retail CBDCs were not considered either. The New York Fed included its usual disclaimer about the research not signaling a decision on the introduction of a US CBDC. NYIC Director Peter von Zelowitz said in a statement, quote, from a central banking perspective, the proof of concept was conducive to exploring tokenized regulated deposits and understanding the potential functional benefits of central bank and commercial bank digital money operating together on a shared ledger. The project was announced in November as a 12-week pilot. Bank of New York Mellon, Citi, HSBC, MasterCard, PNC Bank, TD Bank, Truist, US Bank, and Wells Fargo took part in the project. Now, it gets a little weird because if you dig into this topic in particular, you start to notice some relationships going on here in the background that meanwhile on the face of it, what we hear is, well, we're not participating with any current, stable coin systems, any current cryptocurrencies or blockchains. We're removing trustlessness. We're removing anonymity. But at the same time, you start to put together 2 and 2 together with the Federal Bank of New York's Innovation Center and the Federal Reserve Bank. And then you start to put together that a lot of these partnerships also have partnerships in relation to, of course, Ripple, or at least people that have come from Ripple, which is really interesting as well. So here's another article on it. Both of them are linked down below. This goes a little bit more into depth on specifically the partnerships that you can relate them into between. And obviously we are seeing this release coming up. It's supposed to have some sort of CBDC release this month in July. But here's where things get interesting. The Federal Reserve Bank of America embraces Ripple for real-time settlement platform. Will the XRP price soar to the new all-time high? And this is where things get a little odd. The United States Federal Reserve is poised to revolutionize the nation's financial transactions with its upcoming launch of FedNOW, an innovative instant payment service. First announced in 2019, which on this channel we've been covering since 2019, the Fed aims to activate the service by July of 2023. I remember even last year talking to this about people and them being like, you're insane. There is no CBDC coming. And then I was like, well, what's this FedNOW? And I was like, FedNOW is definitely coming in July of next year. And people were like, that's not happening. And look, this is just, it's pretty insane. The FedNOW service is designed to enable rapid funds transfers across the nation's financial institutions, reflecting an important leap in modern banking technology. Now, this one's important because we're going between different financial institutions. And if you want to look at anything that is connected specifically to Ripple or what Ripple does, this is what they were basically trying to do, which is enable transactions between different financial institutions. So you do have some you do have some partnerships here that are important for like ACI Worldwide, which powers the FedNOW and is a Ripple partner. In the lead up to the launch, the Fed will begin certifying participating banks starting from April. The banks keen to get involved will need to partake in a customer testing and certification program informed by the lessons learned from the FedNOW pilot program. The collected data will assist early adopting banks in fine-tuning their system before live transactions commence. A call to action has been made by Ken Montgomery, first vice president of the Federal Reserve Bank of Boston and FedNOW program executive. He has urged financial institutions to prepare for the forthcoming launch, stating that the FedNOW service is open to all regulated banks in the country. This development takes place against a backdrop of growing interest in alternative blockchain-based solutions. One such solution is Ripple, a blockchain company closely associated with the XRP cryptocurrency that aims to offer cost-effective real-time cross-border payment solutions for banks. Remember, this is a little bit separate from what you would see in the US itself or for the citizens of the US, right? So you have basically this layer that will go for cross-border payments. So from the United States to outside the United States, as well as between the financial institutions within the United States. And here's where things I think will get interesting. The trustlessness and the anonymity, well, at least the trustlessness will probably be utilized for cross-border payments. So traditional blockchain type technology, while anything that is utilized by citizens within the country for the CBDC itself, remember, these are kind of two separate things that are going to be happening. So you'll have your transactions that are cross-border and between financial institutions, which will utilize trustlessness, and anything that the citizens use, like the CBDC itself, will lose its trustlessness, right, and its anonymity. And that's because obviously the financial institutions that are within and outside of the US borders will want to have some sort of trustlessness to verify transactions. While on the flip side, the government and the Federal Reserve and FedNOW, or not FedNOW, excuse me, all of the all of the banks, etc., the governments will want to have basically some sort of control over the population. So, rules for thee, not for me, right, is kind of what we're seeing here. Another notable entity in this space is Stellar Lumens, a blockchain-based payment network that offers a speedy and more affordable method for executing global payments. However, it appears that FedNow may pose a challenge to the blockchain solutions. The integration of FedNow with Metal blockchain, as announced by the Metal blockchain team, allows for swift conversion between funds and stablecoins, marking a significant stride towards bridging traditional banking with decentralized finance. This positions FedNow as a potential rival to existing cross-border payment systems such as Ripple's XRP and Stellar Lumens, in addition to various stablecoins. Hence, what you will probably see is some sort of regulatory attack on XRP and Stellar Lumens unless there is some sort of partnership that happens here. Now, this is a question that I don't have the answer to, so I think you would be well advised to be extremely cautious surrounding both Stellar as well as Ripple, right? Because what you need to understand is we have seen here in the past, like everything that's being worked on as far as the proof of concept for the CBDC, as well as the FedNow payment system. We've seen people that were working on Ripple quit Ripple and move over to help and advise on this, which means we could see the theft of this intellectual property by the government from a company, and then regulatory blocks come into play and attack Ripple, which is what it appears as right now. But then we bring into question, of course, these partnerships with FedNow that also are partners with Ripple, right? Like the ACI Worldwide. So is there some partnership that could be basically leveraged here that would actually benefit Ripple or, of course, Stellar Lumens in the long run too? And another point to that is then you have the competition between Stellar Lumens and Ripple. So if, let's say, there's a partnership between FedNow and CBDCs with Ripple, Ripple, let's just say Ripple, and then you start to see regulatory attacks slammed on the Stellar Lumens, and that gets squashed, that could be a possible scenario as well, kind of similar to what we were seeing between the kind of initial regulatory attacks on Coinbase, right, to those kind of lightening up, and then of course the partnership with the NASDAQ and then BlackRock and everything, and then the regulatory attacks all getting shifted over to basically Binance. So when we talk about this, it's important to note that you can't predict, because essentially we don't have the trustlessness. Well, we don't have the visibility on that, right? So the only people that have the visibility on that are going to be people that are specifically working within these companies, and we can get some hints and stuff like that, but I would be very careful surrounding any investment in these in particular. The allure of FedNow lies in its ability to provide faster, cheaper alternative to somewhat cumbersome centralized systems of payment that currently requires days to process payments, even during business days. With this in mind, financial institutions may want to keep an eye on FedNow's development. Whether the FedNow service will utilize Ripple, Stellar Lumens, or other fintech companies is a question yet to be answered. In the meantime, it's clear that the financial sector is on the brink of a significant transformation. Welcome to the digital financial transformation that we've been waiting for on this channel for many, many years. In the meantime, FedNow's arrival in July signals a new era for instant payments, and its potential impact on the likes of Ripple and Stellar Lumens will undoubtedly be a key area of focus on the blockchain and financial sectors. As you can see here, we have a chart of the XRP price. And since this announcement a couple days ago, we have started to see, actually, this is just for today. We're starting to see, you know, obviously a pump in this. I think I had it pulled up over here as well for the past day. 7 days, you can see a big dip down, and then boom, we have this little pump happening today. It's potential that people will be FOMOing into this. I think also taking a look at stellar lumens is probably going to be beneficial as well. Similar kind of like initial signals of people showing some sort of interest. It looks like holders that were buying like low are definitely starting to try to capitalize on that, as both of these charts look almost exactly similar over the past day, which is this like little quick spike up and then a quick spike down. Just something that's interesting, I thought, overall, but nothing massively significant on it yet. But I think the news has been very squashed in this particular scenario. If I look at a majority of the large cryptocurrency news outlets, let's say like CoinDesk, Cointelegraph, we're not seeing much talk about this. We are also not seeing a lot of the cryptocurrency influencers talk about this in particular. I mean, it's been a pretty taboo topic across the board. I think it causes a lot of, probably fear is the right word within the general population when you start to realize that what is happening here is a transformation and a move into more control that the government will have over your finances. And so it's not a popular topic, right? People want to know about making money. And this is a lot less about making money, this transformation, than it is about the shift of power that is going to happen. And we're either going to shift, you know, that power back into the hands of the public with trustlessness and anonymity, or we're going to shift the power greatly into the favor of governments and financial institutions with CBDCs and payment systems like FedNOW. And it's going to be really interesting to see how this plays out. Some of what I feel is happening is this shift towards that, but there's this backup plan that seems to be taking place to suck up all the Bitcoin by the likes of BlackRock, right? So it's like the Bitcoin turns into gold, but if BlackRock owns all the gold, then how does that put the power back in the hands of the individual? There will be a shift of power here that happens no matter what. There will be a shift of essentially, just like every other transformation that we've seen, there will be a few people that come out on top, right? Like the Coinbases, like we go back to like the tech revolution, we talk about like, social media is a really easy one, right? You see basically some people come out of that, like Jack from Twitter, like, Mark Zuckerberg, that sort of thing, and a shift in like, basically who are the richest of the rich, but you don't see a shift of a abundance flowing to basically the general population. So there will be a shift no matter what. The question is, of course, is who benefits from that the most, right? Now, what it doesn't appear to be shifting to are the Bitcoin miners, unfortunately, except from the perspective of it being consolidated more and more and more and more. We've talked about JP Morgan, of course, saying that we will see more and more competition within Bitcoin mining, that there will be more consolidation and so on. That does appear to be what is happening. We have this performance computing and AI that's coming along the lines that's really also shifting the GPU mining market in a very interesting way, away from that. Like basically GPU miners used to be, of course, the way you could mine at home and have some sort of supplemental income. Now that is shifting more into basically traditional high-powered computing scenarios where, frankly, a lot of the GPU miners are going to be forced out. You'll have a few big ones like Hive that's already made this transition and so on that'll survive, and you'll see a consolidation of that. And so Bitcoin mining, though, is a game of survival, consolidation, and potential AI diversification. Now, I haven't seen any AI diversification and high-powered computing from pure Bitcoin miners. However, there has been some talk of machine learning through ASICs that I think will be coming down the pipeline, but I don't have technical details on that yet. But if you guys have more information on that, please let me know over at like sonofatech.locals.com or over on my Twitter at sonofatech. That's something I've been trying to do a little bit more research on, because the potential of ASICs being utilized for machine learning, I think, is really interesting and could provide, you know, ASIC miners another outlet outside of, you know, Bitcoin Trash and so on, right? Maybe like what, Digibyte or something along those lines, or some other like SHA-256 fork that doesn't matter. Bitcoin mining stocks listed in the US have more than doubled this year after being decimated in the crypto carnage of 2022, broker Bernstein said in a research report. The resurgence has been driven by two main factors, the report said. First, strong Bitcoin price action due to improving sentiment resulting from BlackRock, Fidelity, and other institutional exchange-traded fund filings. Second, some Bitcoin miners are tapping into opportunities in high-performance computing and artificial intelligence as a revenue diversification strategy, the note said. I think from a Bitcoin mining perspective specifically, we're not seeing this high-powered computing and artificial intelligence. Let's be extremely clear here. That is Hive, that's data center style infrastructure, traditional data center style infrastructure. That is not the Bitcoin mining containers as pictured above here. This is not what they're referencing, right? Now, there are significant things that are happening within the Bitcoin mining industry that are primarily focused on leveraging the amount of power they utilize very closely with power companies, power cooperatives, and just basically the power industry, to where they are able to basically bring the price and the cost down, as well as generate additional revenue while they're shut down. I think that is more indicative of a shift that we've seen that is very significant in being able to survive as a Bitcoin miner, and not the revenue diversification strategy of artificial intelligence and high performance computing. Quote, this unique game of survival where the best-in-class miners with low costs and conservative debt profiles can survive, consolidate capacity and market share to earn hyper-normal profits when Bitcoin prices exceed the cost of production, analyst led by Guadam, I cannot pronounce that name, wrote. Bernstein notes that weaker miners with high debt are not able to survive and, quote, capitulate during crypto winters, end quote. This is why even during the last bull run, when we were running up through it, I would advise, of course, don't take out debt, that sort of thing. The lower your debt is in a bull run, the better survivability probability you have, survivability probability that you have within the bear market. And I do go over all this in my crypto mining e-course at sonofatech.com if you're interested. Bernstein notes that, so the broker says the first round of consolidation has already played out and surviving. Miners are now adding capacity in anticipation of the Bitcoin halving, when mining rewards are cut by 50%, an event that typically drives the price of Bitcoin higher, as well as the price of the entire crypto market too, in general, because a rising tide raises all ships, as the famous Carter from Carter Bitsby Trippin likes to state. The next Bitcoin halving is likely to occur around April of 2024. Wall Street giant JP Morgan also recently said in a report that over time, the Bitcoin mining industry will consolidate and become more competitive because only miners with lower production costs will be able to survive. Now, that's yet to be seen, because we can see, of course, a scenario in which it plays out that we see the market rise enough to where a home miner with a couple ASICs is profitable. It'll be difficult to run them, of course. You'll start seeing people utilize their dryer plugs and other creative solutions, sheds, etc., to do this. But it is fair to note that even in that particular situation, it will be extremely difficult to compete with these companies. Now, a side note here, we still have ASIC manufacturing, regardless of how much it has ramped up. ASIC manufacturing is still a lot less ubiquitous than like GPUs, for example, and so on. And what that means is that from an investment strategy as an individual from home, there is this possibility of stacking up miners in the anticipation for a shortage of ASIC miners. And in that particular case, when you start to see these mining companies looking for more hash power, it can drive the price of the ASICs up. This is a different strategy as opposed to mining with it, because you can't invest in the power and be competitive with these companies. But what you can do is leverage what they know and what you know, which is the price of the actual ASIC machine itself will go up, and you have an investment strategy from that perspective. And so you can go ahead and stack those up, put them in a storage unit, and then sell those off. This is something that I talked about on my crypto mining e-course as well at sonofatech.com, and something that I'm implementing specifically as a strategy for myself in anticipation for this particular move forward. And if you're interested in purchasing some of these ASIC units too, I have been working with a bunch of different partners to go ahead and get availability for those. For example, the most popular one here recently from the home miner perspective or the investor perspective, thanks to Voscoin, has been the S1990 terahash model, which I do have about 100 left. If you guys are interested in those, you can hit me up over on Twitter at Sonofatech. I'll give you my Telegram details and we can get those out to you. I am under the $1,000 price mark for those in particular. I also have some 104 terahash available, some 110 terahash available, as well as some 100 terahash available. So if you're interested, let me know. I haven't gotten to the point of building a storefront and getting that all ready. Everything is just invoiced through basically like a QuickBooks type thing. So this is kind of what I'm looking at personally. I'd like to hear your thoughts and opinions, of course, in the comment section below, as well as in the live chat. Next, this one is for the GPU miners. The Asus RTX 4060 Ti with 16 gigabytes of memory ends up with a higher price tag than the 4070 from NVIDIA. Now, if we compared that, of course, to the 4070, maybe it's not as big of a deal until you take into account, of course, the power consumption reduction that could potentially take place here. According to officials from the RTX 4060 Ti series, equipped with 16 gigabytes of memory, will be priced $100 higher than the 8 gigabyte variant. NVIDIA has set the price for this particular model at $499, while the currently available card is being sold at $399. It has been a common occurrence for the Asus ROG Strix models to command higher prices upon each release, making the NVIDIA manufacturer's suggested retail price an unattainable dream for many buyers interested in the Strix series. The Strix 4060 Ti 8GB is no exception, currently retailing at $489. This price point is simply unreasonable for a 128-bit architecture at this stage. Nonetheless, Asus's pricing will also be influenced by NVIDIA's change in MSRP for the 16GB model, which could potentially drive the price up to $600 if the information from IT Home proves accurate. It has been reported that the 4060 Ti 16GB variant will be priced at 4699 RMB, just 100 RMB shy of the 4070, which retails for 4799 RMB for the Founders Edition. However, it is important to note that the MSRP does not apply to the AIB custom models anymore. The RTX 4070 can currently be found for 44 RMB, making the 16GB model from Asus still more expensive. According to the reports, Board partners have expressed concerns about the challenging sales project or prospects. Woo, there we go, for the RTX 4060 Ti featuring 16 gigabytes of memory. Primarily due to its high price, the situation may be even more severe than anticipated by NVIDIA. Here's the thing though, go watch the hardware unbox video review of the RTX 4060 Ti, and I think it was versus the 3060 Ti. And a lot of games, because of the reduction of the memory from 12 gigabytes to, of course, the 16 gigabytes or the 8 gigabytes, perform significantly worse in a majority of titles, which is pretty interesting. So I think it should have come with 16 gigabytes of memory out of the box, but that's not what we saw. So from the gaming perspective, the 16 gigabytes is needed. From the mining perspective, the 16 gigabytes adds basically benefits from, the memory intensive algorithms, as well as some of these new AI and solver processes in cryptocurrencies such as Dynex. Speaking of mining, we do have a new release from Team Redminer. This came out 17 hours ago. It's version 10.14. We actually did not get a ton of changes here. There's just a ZIL patch release that fixed ZIL mining on Epoch 1 instead of Epoch 0. And the first set of release binaries were retracted and replaced due to the ZMP protocol not working properly. So this was a couple days, or I think, a little more than 17 hours ago. They took it back down. They updated it again. This is a new update. Now, so if you're mining Zilliqa, definitely check it out. And of course, Zilliqa is going viral on Twitter right now, post upgrade to 9.2, which we covered earlier in the week in an episode of Blocks, if you want the details on that. So we are seeing Zilliqa kind of start to come, get a news cycle and get some traction and start rolling here. We have Gminer version 3.41, which also released yesterday, which supports ZIL mining on Epoch 1 for non-ZMP protocols. Same thing. So same update between Gminer as well as Team Redminer. If you're mining Zilliqa, it's probably recommended, I think at this point, to utilize one or the other. Team Redminer for your AMD GPUs, and then Gminer for your NVIDIA GPUs. And there you go. Now, the big thing that I wanted to talk about this week is the move to proof of useful work across the board. We have a couple of different forms of proof of useful work that are going to be taking place, right? We have a few different projects that are already working on this stuff. Some that, are not released yet, some they're releasing. We have different uses for the use of work, right? So you have anything from AI to solvers to machine learning. Everything is, or cloud hosting, cloud gaming. All of these things are going to have their kind of individual requirements that will determine what you should be purchasing for hardware. Now, the most demanding from what I have seen so far is going to be within the AI realm of things. And so what I have here is requirements for CUDA compute. And I wanted to talk about them a little bit because I think it's definitely important, if you're already looking at the Octo server, to understand that you will want to go with some upgrades on the Octo server that are very important. So what I'll do here is I'll pull up the Octo server for you guys. And then we'll also have these requirements, and we'll kind of build out the server, right? Because it's going to be more expensive than the base price. This is provided we're going with essentially the idea that we want to be prepared for AI. There's a couple other things that also, I think, additional costs from the networking perspective that are going to bring in, I think, significant cost increases as well. It may get to the point, really what it needs to get to the point of, if we're being completely honest, is that proof of useful work will need to be profitable enough that you can pay a colo to host your rigs, right? This is why I think also what we saw from the design on the Octo server is a 4U design up to a 5U, right? With the little riser thing. but on the traditional width that you would rack in at like a colo. And that is because I think the shift will go towards, hosting. If you're an individual, finding colo space that's affordable, that does drive up the cost a lot, but it's going to be a lot better in particular typically than it would be if you're trying to build out your own, right? Because you're going to have not only networking, but cooling, so on and so forth. So this is probably some potential reasons for why that design choice was chosen. And I think I agree with it. But if we look at the CUDO compute here, requirements for basically AI, for bare metal hosts. Now they in particular require that you have 5 bare metal hosts at a minimum. That's not going to be for proof of useful work, right? But each bare metal host should have the following minimum specifications: an x86 Intel or AMD 16-core processor or greater with VTX or AMD V enabled. Now, I do question as to whether or not the X99 platform, from in particular OctoMiner is going to be the best bet, or if you want to wait for them to actually upgrade to a newer generation processor that's going to support, basically higher CPU clocks, more security patching, that sort of stuff, right? Because X99 is an older architecture as far as that goes. 64 gigabytes of memory or greater, a single 128 gigabyte SSD for the OS boot volume, and at least 2 terabytes or larger available, right, of SSD space. A minimum is 1 DWPD endurance rating and a capacity disk. Multiple capacity disks are supported. Now, the next one, it will run over 2 1 gigabit NICs, but it does recommend 2 10 gigabit NICs. I'm going to recommend that you prepare with 10 gigabit NICs in particular. Now, they do also, here's where this gets a little bit more interesting. So for onboarding for CUDO compute, they require basically remote management, the iDRAC, ILO, and IPMI. iDRAC is the remote management for Dell. ILO is for HP. And so this isn't basically going to be something that's relevant, I think, for in particular once we move to blockchain. But for support and so on, this is something that I talked about, with my issues with Octo Server from the very get-go, which is you don't have those support options, right? From Dell, specifically from HP. If you wanted to transition from Flux back to something like CUDO compute, let's say you get 5 on there, they're paying a lot more, you want to move over to that platform, having that availability for support right off of the bat is going to be something to take into consideration. So just keep some of these things in mind. And I think the biggest requirements here from the perspective of cost is going to be a minimum block of 32 publicly routed IPv4 addresses that can be presented directly to the bare metal host without firewall or NATing. So you are really at this point going to have to pay for business grade internet. And that will, if I look at a quote for a block of like 5 IPs from Spectrum Business in Texas, we're looking at a starting price of $1,600 a month. We want to scale that up to 32 routable IPv4 addresses. I mean, they get cheaper, but not a lot. Not a lot cheaper, right? So this increase, is that going to be necessary for something like Flux OS? I'm not saying, or proof of useful work specifically for like something like Flux. I'm not saying that it will for sure. But once again, if you are on Flux and it's not as profitable and you want to move back over to something like CUDO compute, it's important to keep in mind that this is kind of what the requirements are. So this does basically Quantity available IP addresses determines the number of virtual machines that can be provisioned. Remember, the way that Flux currently works in its iteration is it doesn't go across this type of it doesn't go specifically with dedicated IPs like this. So I don't think that for Flux this will be a concern, just off the top of my head. You can correct me if I'm wrong, but that also may change depending on what services they decide to provide and so on. For VLAN requirements, you are going to need a networking guy. I think at this point, if you're wanting to build this out, you'll need a /24 or larger IPv4 IP private IP address range allocated to that VLAN. Not really that big of a deal. A router on this VLAN is to act as a default gateway, outbound NAT access to the internet. A jump server, pretty common. I build jump servers all the time. We can kind of go over that if you guys want. But basically a jump server is basically a low power VM that you run to allow people to come in and then connect to your internal network and then connect to the devices that you give them access to within your internal network. A DHCP server running on this management VLAN with a small DHCP scope of 20 IPs with the allocated private IP range. Host IPMI OOB should be assigned to IP addresses on this range. You'll need one public VLAN presented to each of the host ports as tagged. The public IPv4 routed address range should be assigned to this VLAN with no NAT or firewalling in place. And then you'll need a VLAN presented to each of the host ports as tagged, a /24. This is going to be the internal private IP address range allocated to that VLAN. Public pricing and partner discounting or pricing, or if you are providing existing capacity into the network, the pricing to make available to the marketplace. So real quick, if we build one of these out, right? I think the biggest changes were that you had to upgrade. Well, and this is the problem. I think we have to start with the Flux one. And that is primarily due. I think really you would order one of these and then buy yourself a 2 terabyte drive unless I see an upgrade here. Okay, so you can do mid-spec. But mid-spec. I'm wondering what mid-spec is because it's not listed here. Unfortunately, just high spec because you'll need the 2 terabytes of M.2 in particular here. So we're probably are starting. I don't know what the mid-spec includes. I'll have to ask Chili. Sorry, guys. I thought we would be able to see what that includes right off the bat. Because you'll need that 2 terabyte, and then you'll need to add on, in my humble opinion, the dual network cards. So we'll go, and then I only know for sure that the high spec does that. So the high spec, why is it not updating my price? Let's add the cart and see if it puts it in there real quick. High spec, E10X99, 2115. Not bad. Like I said, my only worry here in particular is that I think the CPUs might be a little bit outdated as far as that's concerned. So I would plan on for sure being able to go with a high spec or a medium spec if you don't need this much memory, right? It may even be, this just says mid spec. Okay, so there's not a third one. That's my bad. So there may not be a need for, it says like you only need 64. The more VMs you can host, the better it's going to be too. As well. So keep that in mind as well. But you may be able to do like just a mid spec and upgrade your. I think that price is wrong because the high spec's not. That's very odd. The high spec is coming in at the same price. as the mid spec. Is it not? Yeah, it is. So I don't. I'm not going to say anything else there. The mid spec, the high specs being charged the same as the mid spec right now on the site. So, I mean, maybe something that you want to be aware of. So I think that from the perspective of this in general, you do that, you're in at 2115. The other option would be you just upgrade the storage by yourself. You don't go with that in particular. The 1 terabyte and 2 terabyte M.2 SSD would theoretically also be used specifically for the VM, or not for the VMs, but for the, excuse me, but for the OS. So, you know, you probably only need whatever, like a cheap 500 gigabyte, like SATA drive for the OS, SATA SSD, and then plug in that 2 terabyte separate. So you probably want to allocate another $25 to just buy another one off Amazon or whatever, if you were going to buy like the Octo server, for example. All right. Gordon. So get high spec. Yeah. And then there are no, it doesn't look like there's a management card. So no iDRAC or no IPMI card, on these. So if you were wanting to transfer over to, Kudo Compute, for example, you would need to speak with them about other, remote access to BIOS settings, essentially, or how that would function for the onboarding. So keep that in mind with the Octo servers in particular. So I don't know if this is, it says this is a requirement for onboarding. However, to be fair, Octo server or Octo Miner does say specifically that they're compatible with Kudo Compute. So that's a question I have in general. Let's go ahead and look at the top gainers for the past 24 hours. We got Dynex in first place, coming up 11.68%. At 38 cents. We have Nexa in second place, coming up almost 4%, and Kaspa at 3.37%. Over the past 7 days, the top 3 losers are Raptorium going down 5.27%, Beam going down 5%, and Neoxa going down 2.61%. The top gainers for the past 7 days is Radiant in first at 15.44%. Remember, these are all proof of work cryptocurrencies. Kyla Coin in second at 13.08%. Of course, you do have support on the E300s to mine that, just in case you do have some of those. And Beam up at 2.2%. The biggest losers over the past 7 days is Nexa, losing 26.38% over the past 7 days. Ethereum Fair down almost 15%, and Ethereum Classic down 10.45% over the past 7 days. Kind of going back on a downtrend overall within cryptocurrency. The biggest recoveries, I think, today appear to be, you know, not on the proof of work side of things and more on the proof of stake side of things, especially with the potential surrounding XRP and Stellar Lumens being tied to the FedNOW payment systems. If we look at mining profitability, we are seeing, you know, a lot of these shit coins just popping up all over the place. Sky Doge and Pepe proof of work with unknown volumes and all this trash, but Radiant really being the most profitable on the 4090 here. Taking a look at the 3080 or 3090 Ti, like we've been keeping track of for a while. Radiance in first, with Novo in second, not recommended, and Alephium really in third there. Obviously, the price pump in Alephium really making this kind of the big dog. I think we could say Dynex is in third place, but the profitability is pretty low as far as that's concerned. Now, we are seeing another bump up in hash rate on Kaspa. And a lot of the pools are starting to, you know, when kaspa first launched, everything was really, you know, solo mining focused because of the advantages it provided. But with the new kaspa ASICs, we're seeing a shift back to pooling just because of the ASIC support for specific pools and not supporting solo mining. As that changes, maybe the hash rate of unknown starts to go back up, but we've gone down, I think, overall from this year from 80% unknown hash rate to 26.5% unknown hash rate. This doesn't mean, of course, that Bitmain will be following suit. We're still waiting on those to come onto the network. What appears to definitely have happened was that we got all those shipments from Ice River. It's only taken that hash rate up to 1.48 or 1.5 petahash a second. Difficulty has had a recent spike. It is, you know, going to be pushing, of course, your profitability down pretty significantly. That being said, Bitmain has already officially delayed their kaspa miner. Show you guys here. Their shipment dates have gone to September. Initially, they just had August basically listed. They are sold out. We haven't seen them start to hit the network for testing purposes yet. However, the shipping date has been pushed to August to September, actually following suit exactly like we started to see with Kadena, where it went, you know, from a single month release or shipping date to a 2-month shipping date, and then eventually delayed for 4 months. I would keep an eye on this. My thoughts behind this is this means that between August and September, we'll start to see Bitmain begin to test these units, and then we'll see another shift and a push out on their shipping date to August, September, October, November, December. If I had to take a bet and throw on my conspiracy theorist, you know, tinfoil hat that I have surrounding, you know, the way Bitmain functions, that we will probably see network hash rate begin to increase between August and September significantly, up to, like we stated before, due to the advertised availability, to at least 41x of the current hash rate, driving difficulty up significantly. We'll see the profitability at the current price of kaspa with that come down to the $70 to $60 range per unit. And then we will see the shipping go out in sometime around December. And then we'll have to see how the price reacts once the individuals get those particular miners. So they might play this a little bit different than they did with Kadena. I think I would if I was Bitmain. I wouldn't throw as many onto the network as I did previously if I was Bitmain, right? I'd throw a few less so that the price or the return looks better, but it is sold out. So it's also like, does it fucking matter anymore? Which the answer is like, probably no. They've already sold out of these units. If they threw everything down in August, they already have everybody's money, you know, due to their payment methods, etc. It's not like anybody's going to get a refund. They drive that profitability down to 60, 70 bucks at the current price of kaspa, and then they just rinse and repeat. I mean, there's no disadvantage to that for them. The only thing that would change that is if they had a second batch prepared soon after the initial batch here, in which case they may, like I said, not throw as much hash rate on there to make the profitability look a bit better. Other than that, we do have some ASIC mining profitability. Like always, the KS3 still, you know, showing like, well, it's gone down pretty significantly. It was around 3,000. It's gone down, you know, to 2,300. KS2 is now down to 567. So it has gone down pretty significantly as well. If we scroll down from there, the main staples that have been sitting around for quite some time has been the L7. A new one popping up here that's interesting is the Antminer K7 on CKB, actually kind of coming up in profitability. Antminer L7, though, will, I think, still be more profitable. Let's check that out. Yes, it is for the merge mining 986. So technically, as long as you're merge mining, the Antminer L7 is beating the K7. In this particular case, it's a unique case because of merge mining, so keep that in mind. And then going down from there, the Antminer KA3 has gone up pretty good. It's up to 613 a day in Kadena. I think we had a price pump in Kadena. Is that correct? Let's go over the 7-day. Maybe it was a month. Yeah, so we had the price pump back on the 20th, which has helped out quite significantly for the profitability on the KA3. Hopefully we see that continue to rise and the people that bought a lot of the KA3s start to get some of their investment back a little bit more reliably. We got the Antminer S19 Pro. This is kind of the one we always take a look at. And I think in particular, the most interesting thing is the rise of Bitcoin Cash. The price of Bitcoin Cash obviously is what affected this. We talked about it in the episode of the blocks. Well, in that 1 month, we've seen a pretty steady increase in the price of Bitcoin Cash due to their partnerships, which has influenced, of course, their mining. Now, another interesting thing for Bitcoin Cash as well is that the difficulty and the difficulty spike did happen. So there were people that did convert over from mining Bitcoin to mining Bitcoin Cash. However, we are starting to see that stabilize and come back out. So it's up to 1.4 exahash a second, or 2.96 exahash a second with 52% unknown. I'm not sure how valid that is and how many people are basically mining to their own node would be the question in the case of Bitcoin Cash. I assume that there is a large mining farm that is probably mining to their own node at this point, or maybe a couple of them. I think that goes ahead and covers all of the news today. Thanks everybody for watching. Hit the like, comment, subscribe, and notification bells. We'll get into some Q&A here at the end. Remember, super chats are never required. Always appreciated first to be answered because they're the easiest to read. Tagging @SonOfATech will highlight the message orange, and I'll be able to read it even that much easier. So let's go ahead and get into it, and we'll go from there. I'm out of coffee. Everybody, DJ Minds is in the chat. Make sure you go ahead and throw him a sub here on YouTube. That link out. For you guys. La 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 la. Son of a rabid panda says, @SonOfATech, glad to see you live. Just saying hello, shopping with the wife. I'll watch everything later. I think today we had a lot of interesting topics. I was worried that blocks was going to prevent us from having interesting topics, and then like everything blew up. So there is that. Retro Mike with a $20 super chat. Thanks, man. That means the world. Woot. That's more than all of our ad revenue from the day. Hugo Down becoming a member for 17 months in a row now. Says, thanks for all you do. Love what you do for the community. Speaking of memberships, so Rocket Chat is basically turning down their mobile app, their push notifications. A lot of different things are happening over there. So I will be turning down the Rocket Chat server. I will have an export and a backup of all your chats. So if there's, if we need to recover it later on, I will. I'm waiting for TeamSpeak to finally fully launch their Discord self-hosted version. I'm not too worried about having live or chat like that right now until TeamSpeak is out and I have a platform that I enjoy doing that on. So, Locals is doing a great job for us as far as like everybody can communicate pretty seamlessly. It works more like Twitter, that sort of thing. So you can check that out over at sonofatech.locals. That'll be the only communication platform right now. Of course, if you're looking for a Discord-like experience, Red Panda Mining's got that under lock, so you can go join his. It's also been costing like Rocket Chat, like resource-wise has gone way up. The pricing of VPS has gone way up, so my bill's at like $70 a month. So I'm going to turn down the Rocket Chat server. We'll be making some adjustments on that. We'll be keeping the TeamSpeak server up, though. No problem there. Babblefish says, "As Sonofatech just contemplating the next ASIC miner purchase." Well, I have some of the best prices on used SHA-256 miners, so definitely check that out. Bolek says, "As Sonofatech, have you ever heard about the Egan layer?" No, I have not. Vinny says, Vinny, thanks for the $19.99 super chat. No question attached to it. We have tripled our YouTube ad revenue for the day. Woohoo! All right, I'm going to go ahead and wrap it up there. Probably not the best time to stream this. Saturdays are a busy day, so hopefully everybody catching it later. If you have more questions, check out sonofatech.locals.com, and I'll answer those questions. For everybody else, please check out sonofatech.com and consider purchasing my crypto mining e-course to get insights on the Bitcoin halving cycle and how I'm playing that out, as well as, of course, just supporting the channel. It helps a lot if you go ahead and do that. Hit the like, comment, subscribe, and notification bells down below. Don't forget to check out the next episode of Blocks, which will release on Monday at 9 a.m. I will see you next Tuesday.